Welcome back, friends. Recently, I attended my school's alumni meeting when I suddenly ran across my former classmate, who was curious about how to start investing. He stated that he has watched and read a few books on investing for beginners, but was concerned about the risks involved. So, I decided to share my investment journey and the lessons I've learned studying great investors like Warren Buffett and Charlie Munger. The main reason I was motivated to adopt their philosophy was basically because of my concerns about risks with the stock market, because it's true that the risk is real. That quick conversation sparked today's video, and this is one you cannot afford to skip. Yes, the stock market carries risk, but it's also one of the most proven engines of wealth in history. Consider this. Over the last century, the S&P 500 has delivered an average annual return of about 10%, and according to Federal Reserve data, more than half of U.S. households that invest in stocks have seen their net worth grow dramatically over time. If you've ever wondered how ordinary people build real wealth or create passive income, stocks are often the key. From teachers to small business owners, countless everyday investors have turned consistent investing and smart ETF strategies into 6- and 7-figure portfolios. Today, I'm pulling back the curtain on my journey of owning 700 shares of SCHD. This powerful ETF has become a cornerstone of my strategy for dividend investing, retirement planning, and achieving long-term financial freedom. We'll discuss why this ETF deserves a spot in serious portfolio management, how it fits into a smart investment plan, and what my experience can teach anyone focused on wealth building. So, stay with me as we explore why so many believe that dividend investing through this unique ETF could be the key to achieving financial freedom and creating lasting passive income. Your path to smarter investing and long-term security starts right here. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. In addition, all projections in our content are based on historical returns, growth rates, and performance. But also remember that past performance does not guarantee future results. Always consult a qualified financial professional before making any investment decision. Every investment involves risk. Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. Firstly, let's start with why SCHD is a standout dividend ETF. The Schwab U.S. Dividend Equity ETF, SCHD, stands out because it blends reliability, quality, and long-term growth potential in a way that few other exchange-traded funds can match. SCHD is built to track the Dow Jones U.S. Dividend 100 Index, which means every company inside the fund has been carefully screened for financial strength and a proven commitment to rewarding shareholders. In plain language, you're investing in a hand-picked collection of high-quality American businesses that have demonstrated the ability to pay and consistently raise dividends year after year. What makes SCHD special is the strict set of rules a company must meet before joining the fund. Each stock must have at least a 10-year track record of uninterrupted dividend payments, strong cash flow, and solid fundamentals such as healthy return on equity and manageable debt levels. This rigorous selection process helps weed out companies that may appear attractive in the short term, but lack staying power when markets become volatile. Another key advantage is cost efficiency. SCHD charges an expense ratio of only 0.06%, which is dramatically lower than many actively managed funds. Lower fees mean more of your dividend income and potential capital gains stay in your pocket, helping your investment compound faster over time. In addition, SCHD's focus on blue-chip, dividend-growing stocks makes it a natural fit for investors seeking passive income, retirement planning, and wealth building. By holding a diversified mix of financially sound companies across sectors, it provides both stability and the opportunity for long-term capital appreciation, an appealing combination for anyone serious about dividend investing and steady portfolio growth. Now let's dive into the performance of my 700 shares SCHD position. Over the past several years, I've steadily built my 700 share position in SCHD through a disciplined dollar-cost averaging strategy. Month after month, I invested a fixed amount regardless of market swings, and whenever the price dipped, I added a few extra shares. Today, that consistency has grown into 700 shares, valued at $27.49 each, giving me a current market worth of about $19,243. My average cost basis is $20 per share, which means my total initial investment was $10,000. At today's price of $27.49, I'm sitting on an unrealized gain of roughly $9,243, or about 92% growth, and that's before counting a single dividend payment. With SCHD's dividend yield near 3.5%, these 700 shares are projected to generate about $673 a year in passive income, paid quarterly, without selling a single share. Now imagine the next decade if I simply reinvest every dividend. Assuming SCHD's share price and dividend grow at a conservative 6% annual rate, those reinvested dividends could increase my share count to roughly 1,260 shares in 10 years. At a projected share price of about $49 and a similar yield, my holding could be worth around $61,700, and the annual dividend income could climb to roughly $2,100, all without adding a single extra dollar of new capital. This blend of steady capital appreciation, dividend reinvestment, and compounding shows how patience, smart portfolio management, and disciplined investing can transform a $10,000 start into a powerful engine for long-term wealth building and financial freedom. Before we continue, if you find value in this video, even if just a little, please subscribe to help us continue to create top-notch educational content. We appreciate your support. Thank you. Now let's discuss some key economic forces. Dividends do not exist in a vacuum, and there are three key forces that influence SCHD's performance. Interest rates affect borrowing costs for companies, and higher rates can slow growth and limit dividend increases, while lower rates often encourage expansion and stable payouts. Inflation matters because rising prices reduce the real purchasing power of dividend payments unless companies can raise payouts to keep pace. Corporate earnings are fundamental, as strong profits support higher dividends, while weak earnings can force companies to hold or even cut their dividend payments. Staying aware of these factors helps me remain confident through market swings. These forces interact dynamically, creating both challenges and opportunities. When interest rates rise, dividend stocks often face initial headwinds as bonds become more attractive alternatives. However, SCHD's quality screening methodology favors companies with strong balance sheets and manageable debt levels, making them more resilient to rate increases than heavily leveraged competitors. The earnings component remains most critical. SCHD's focus on financially robust companies with consistent cash generation provides a buffer during economic downturns. These quality characteristics historically enable dividend maintenance or modest growth even when broader markets struggle, demonstrating why fundamental strength matters more than yield chasing. To ensure success, my approach centers on three pillars: hold, reinvest, and compound. With 700 shares of SCHD generating consistent quarterly dividends, every payment automatically purchases additional shares through DRIP, creating an exponential growth engine. This isn't about quick gains, it's about building sustainable passive income that can eventually fund retirement, travel dreams, or simply provide financial peace of mind. The beauty lies in simplicity. While markets fluctuate wildly, SCHD's quality screen companies continue paying and growing their dividends. Each reinvested payment increases future income potential, turning today's modest quarterly checks into tomorrow's substantial cash flows. This strategy rewards patience over panic, consistency over cleverness. Success in dividend investing isn't about chasing hot stocks or perfectly timing the market. It's about patience, discipline, and letting compounding quietly build your wealth. Warren Buffett said it best: "The stock market is designed to transfer money from the active to the patient." When you focus on growing reliable income streams instead of reacting to every market swing, investing becomes a calm, methodical path to financial freedom. Whether you're starting with 10 shares or 1,000, the winning formula never changes. Invest consistently, reinvest every dividend, and trust the power of time. This simple strategy fuels long-term growth, passive income, and financial independence, turning even small beginnings into life-changing results. Are you ready to build your own success story? Your next dividend could be the first step toward lasting financial empowerment and personal growth. Start today and watch what time can do. And if you have already started, please share your experiences or questions in the comments and inspire others on their wealth-building journey. If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth together. Please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. In addition, all projections in our content are based on historical returns, growth rates, and performance. But also remember that past performance does not guarantee future results. Always consult a qualified financial professional before making any investment decision. Every investment involves risk. Click on the next video on your screen. We appreciate your support. Thank you.